Welcome to Let's Talk Property. If, like me, you live, eat and breathe property, join me as I chat to my guests about their real-life property stories. Property people who really do have something to say about what's going on in the property world. We'll be covering all kinds of topics: sales, lettings, land, planning, property management, legislation, compliance, mortgages, insurance, and the finer things like interior and garden design. Property is a topic that people just can't get enough of. So join me, Heather Hilder-Darling, on Let's Talk Property. I'm Heather Hilder-Darling on Let's Talk Property, and you may know us Brits, we really are interested in when it comes to what's happening outside with the weather. Today I was looking at blue skies. It was a bit cloudy yesterday, and yet that is a topic of conversation around every dinner table. Every single time I come into the office, we're talking about the weather. But what effect does this have on the mortgage climate? Now, I've got the perfect person to speak to today, and I want to make sure that 2 and 2 does add up to 4. So let's find out if my guest today, Sarah Guha, have I pronounced that correctly, Sarah?
Yes, Sarah Guha. Yeah.
Oh, lovely, super. Whether she feels her temperature rising when talking about the weather, or rather the impact of climate change, which we are hearing about everywhere at the moment, and how does this affect the mortgage industry? More importantly, all us people with mortgages and letters coming through the door with increases, decreases, further increases, what does that mean to us? So if you have a mortgage, or you're hoping to get a mortgage, or perhaps you're looking to pay off your mortgage, how is the market evolving to reflect these times of climate change? Sarah, thank you for joining me today. I would like you to introduce yourself to our audience because they love hearing about the people I'm speaking to. So in 60 seconds, can you tell me a little bit about yourself?
Yeah, thank you. Hi, Heather, and it's a pleasure to be here. I'm Sarah Guha. I'm the Director of Product at Hometrack. We are a data and software company with the ambition to transform property decisions with trusted data intelligence. For lenders in the UK, that consists of providing digital valuations using our automated valuation model, or AVM as it's often known, and then insights to identify, assess and report property, climate and environmental risks for lenders, both at origination, but also as portfolio managers as well.
I've got a question already. How on earth did you get into that position?
Yeah, it's a great question. So anyone that is familiar with product management will know that it's a role within many organizations that has really matured and become so much more important as the sort of person that is, going between what the business requirements are, what we want to build from a product and technology perspective, but then also becoming the voice of the customer and really understanding their needs and what we can do to help solve for that. So I've history background and then found myself in product. But prior to joining Hometrack and Zoopla, I had previously worked at a challenger bank, Starling Bank, and been involved in launching their own mobile-only current account as well. And so I found myself in finance and fintech by way of that, really.
For somebody like myself who generally groans whenever I get envelopes through the door with mortgages, how on earth do you keep the enthusiasm going?
For me, the interesting thing about the mortgage industry is that whilst, say, in retail banking, we're automating onboarding processes and everything's becoming digitized, in the mortgage industry, there's still so much more that can be done. And so, roughly speaking, less than 30% of property risk assessments as part of a mortgage application are automated today. And at Hometrack, we believe that could be more than 60%. And that's the journey that we're going on with our lender customers. The benefits of that is probably what keeps me motivated. And that's really around a much faster time to offer for consumers and borrowers, somebody that's wanting to be able to secure finances to buy a property, but also a faster mortgage process in total. So it being much more transparent, understanding risks associated with a property much earlier on in the journey, and therefore reducing the likelihood of something cropping up that could mean that the mortgage or the purchase falls through. And that for me is the opportunity that really motivates me.
Fantastic. Now, I mean, again, there's a lot of these, what 3 words are about. Give me, what 3 words would you use to describe the mortgage industry at the moment?
I would say it's changing. So something that I would say myself and at Hometrack, we're absolute advocates for change, and we want to do that in a safe and in a responsible way. And certainly, my experience of working with lenders in the UK is that they are absolutely keen to change and have an appetite for change. To a certain extent, the regulators demand that to happen. Things like consumer duty means that we need to make sure that there is change and we're looking for the right outcomes for consumers. I think another word that kind of comes to mind is perhaps slow. I think the rate of change is something that we would really like to increase, and hopefully, working with us as partners, that's something that we really try to support lenders on that journey, because we're quite pragmatic about the challenges that there are and that we need to overcome in order to improve the mortgage journey.
Again, the changing, the challenging, the evolving, these are the sorts of things that we're seeing in so many areas of our lives today, which sometimes takes your breath away. So I think it's wonderful that, particularly myself being in the property industry, when we see how long tasks have taken in the past, so getting a mortgage, and now you're online and suddenly boom, you've almost got a yes or a no or a maybe straight away, which at least slows down that process a little bit. So absolutely wonderful. But if there was one thing that you could choose, magic wand time, you've got a magic wand, how would you change the industry? You've sort of already covered it, but there must be one thing that stands out absolutely.
Yeah, definitely. I don't know if it is a magic wand, because as I've said, I'm not sure change happens that quickly. But the one thing that certainly I want and what we're doing at Hometrack is all about advocating for an automation first approach to property risk decision making. So somewhere where, rather than a lender having particular rules and choosing what they will choose to automate and where they will use an automated valuation model to determine the value of a property, in actual fact, they would choose to automate that first for all applications. And then only where it wasn't safe or wasn't appropriate to do so, would you then go forward to then have perhaps a desktop valuation or a physical valuation. That for me is really the driving force and the goal that we have.
Excellent. Now, I'm very lucky. I live on the south coast, Sarah. I am almost surrounded by the channel, and we have lots of lakes, etc. here. So we're quite familiar with flooding risk, and a lot of the land deals that we do are absolutely, first and foremost, is it in a flood risk area? Obviously, coastal erosion as well. We know that at Beachy Head there are regular rock falls, etc. And we also have seen images on the TV of properties getting closer and closer to cliff edges as those cliffs are eroded. So this really makes me ask, what has this got to do with mortgage risk?
Yeah, it's a really good question. So natural events like flooding and coastal erosion can affect a property's value. And the reason is that it affects the perceived risk of damage, of marketability, potentially its insurability, the insurance requirements required to get a mortgage for that property. And this is because in the eyes of a lender, the property risk effectively affects the likelihood of that mortgage or the loan being repaid. And therefore, it's a very important thing for them to check and to monitor to ensure that they are safely lending, that they are responsibly, and that they're also holding, really important for stability within our economy is that they are holding enough capital provisioning that is appropriate for that property as well. If the property value declines or if there are issues with the property's condition, it could absolutely impact that lender's ability to recover the amounts and obviously of the sale of that property. effectively lenders will try to minimize property risk by evaluating the property's value, the condition, its location. You mentioned obviously some properties that are, very close to the coast. And they do that by looking at things like climate risks, such as property, flooding, but also proximity to coastal erosion, but also things like ground risk, environmental risks as well. And all of these are used to determine whether that property can be lent on. Depending on that risk, it will likely influence the sort of loan to value ratio. So how much will a mortgage lender choose to lend based on the value of that property? So that's really what's important for a homeowner that has a property that is at risk, is really understanding that.
Now, we've had some very unseasonably high temperatures recently as well. And it's just occurred to me that whilst we've been talking about flooding and coastal erosion, these very, very high temperatures, which presumably when some of the homes were built just after the war, perhaps we hadn't considered how hot it could become in 50, 60 years' time. Are we also taking that into consideration as well, the higher temperatures that might affect bricks, tiles, concrete, and all those sorts of areas?
Yeah, it's a really good question. So I think the first thing to say is that both Hometrack, but more generally, the industry's understanding of the effects of climate changes is evolving. And I know, many companies are always looking to provide more data, more insights across all the different perils. We call them perils in terms of climate risks. Today, the Hometrack's climate change solution for lenders does three things. It collates climate risk data from specialist data partners in order to identify risks associated with flood, coastal erosion, subsidence, and then energy efficiency for an individual property or individual address in the UK. So it doesn't currently feature things relating to temperatures and heat, but we have a product team that is always developing what we're doing, and we work with these partners to be able to incorporate data that comes available. Of course, what's important to us, because this data is being used in mortgage decisions, is obviously that its governance, its source, it's that we know that it is accurate data and it can actually be used within mortgage decisions without having a negative impact. So it's all about understanding how much data is available and then incorporating it when we feel that it's at a point of significance.
The funny thing is, though, when you go to look for a property and, you go through all the, can we afford it? Will we get a mortgage? All those things, you wouldn't necessarily think of, shall I go and look where the flood risks are first, or shall I consider other elements of of climate? We're hearing a lot about more air turbulence. We're seeing more extremes of weather. And it's something that, do you think home buyers will start thinking about this by being encouraged by the work that you're doing to make them think more clearly about these things?
Yeah, I think it's certainly something that we feel that our relationship with lenders, we're seeing that lenders are being much more open and transparent about the checks that they do on a property, and therefore obviously the influence that it would have on a particular mortgage decision that they reach. From a consumer perspective, I think there is a lot of education to do. Hometrack is part of the Houseful group of brands. And so one of our sister companies is zoopla.co.uk. And on Zoopla, we've recently launched a report that includes information about flood risk associated with a property that a consumer can choose to purchase and have access to before placing an offer on a property, and certainly before choosing to purchase it. And what we're seeing is really good engagement with that. There is a desire to better understand the risk associated with a property. I'm sure everyone's familiar with, there's always been checklists of things that you should be checking when you're looking at a property. And that kind of content is what we always try to produce and add onto the Zoopla website in order to guide consumers through the buying process. But yeah, it definitely is an area of unknown, but I'm really encouraged by this kind of desire to be checking things up front, which I think will only be a positive thing for the industry.
And I think also you talked about education. It was very simple years ago I say simple, that's a bit of a nonsense word, really. But, you used to save up for a deposit. You'd find a house, you put a deposit down, you'd buy it, and then you almost forget about it. But nowadays, with all the new bills that are coming up, particularly in flood risk areas, particularly when the climate is changing so much, this education process is so important, as indeed Zoopla is doing, regarding ground rent, service rents, all the other information that a buyer needs to be able to make a proper decision on whether it's a risk for them. Mortgage companies take risks, but equally home buyers are taking risks unless they're doing their full set of homework to make sure that what they're buying is absolutely what they expect it to be. So you mentioned earlier about, insurance on properties. If, for example, there was a flood somewhere, we can go and get insurance, but again, that insurance is more likely to be far more expensive than a property which isn't in a flood risk. How do you think we can educate people on, although, again, depends on your risk, doesn't it? What sort of risk you want to take. How many insurance companies would you go to, for example, if something came up in the inquiries that gave you cause for concern, to say, look, here's perhaps a specialist company which deals in flooding, or here's a general one. What would you generally say about insuring your property?
Yeah, it's a good question. So if a property has been identified to have some sort of flood risk, in the report that Zoopla produces, we will really just give a high, medium or low rating in order to guide a consumer to find out more information about it. And the things that we tend to advise consumers to do is checking the cost and the availability of flood insurance, because as you say, it's definitely not going to be as available compared to a property without that kind of risk. The other thing is you can inquire about any history of flood damage to the property, investigate any kind of existing flood protection measures that are in place around the property or in the surrounding area. That's important for understanding any kind of potential of damage in the future, or the likelihood of flood actually damaging your property. And then there's kind of two other areas is around evaluating the potential mitigation costs. So what might you need to pay in order to protect your own property if there isn't something that is in place in the area? And of course, considering the impact actually of resale. So to consider whether it's the right decision for you. Now, in terms of finding insurance companies that would lend on flood properties with flood risk, there is some good news. There is a joint initiative between the government and insurance called Flood Re, and its aim is to make flood cover part of insurance policies more affordable for customers that live in those kind of properties. I'm probably not the expert here, I will definitely say, but the goal of the initiative is to strive to make properties at risk of flood insurable, and to effectively tackle that. And this joint initiative is, I think it was 25 years or so it goes right on till 2039. And, hoping obviously that has the impact or the outcome of minimizing the premiums that a homeowner will pay if they have a property that is in a risk area.
It's scary stuff though, isn't it? Don't you think it's scary?
Yeah, absolutely. I think, and that's why I think if you're not a homeowner already of a property that's in a flood risk area, it's why it's really important. And as a borrower, you should really use this information to reevaluate your purchase decision, because there is obviously the possibility of financial implications down the line.
So, supposing somebody's sort of set their heart on a property and they can't get insurance, what would you suggest that they do? Do they just literally walk away, or do they take the risk? Presumably it depends on their, risk taking as well.
Yeah, it does. And I think, generally lenders will have different policies. So it will be dependent on the property itself and the risk profile. Some lenders will not lend at all on a property that doesn't have or is unable to get insurance, whereas others will, but they might offer a lower loan to value. So you may need to be able to provide a much higher deposit rate, for example, to be able to secure a mortgage on that property. And so I think really it's researching and understanding what the possible things that are available to you would be. And as I said, I think, another, perhaps flood is a difficult one, but, if we take the kind of broader topic of climate related risks, we look at energy efficiency of properties and there's certainly a lot that can be done. And there are government schemes that will support you in retrofitting a property and bring it up to a particular level. So it's worth exploring those kind of things as well.
We often know that mortgages come and go, don't they? One minute the market is flooded with mortgages, then some of them are taken away. Are there going to become more diverse mortgage products due to the effects of climate change, or do you think it will get a narrower choice?
We're already seeing that lenders have introduced, what they'd call a green mortgage, and they're designed to encourage safer, more energy efficient properties. The way in which they work is that they effectively are in some way subsidized or would enable you to invest in the property to be able to improve its energy efficiency. I can only see, the uptake of green mortgages probably increasing in time. But something I actually wrote about fairly recently in an article is also about how, with increasing risks around property and profiles, lenders don't want to restrict the number of mortgages that they could offer. And therefore, what it could encourage is a desire to have more dynamic pricing in place for a mortgage. So, actually taking a risk profile of an individual, but also the property risk profile and offering a relevant, rate or mortgage term based on the risk profile rather than a standardized approach. Mm-hmm. And that could be quite a positive thing. I think that could be really positive, both for somebody taking a mortgage for the first time, but actually also through the lifetime of their mortgage as well.
Now, you mentioned energy performance and energy efficiency. We all know that before a property is put on the market, it needs an EPC, whether it's for sales or for lettings. So is there anything going to be maybe combined here whereby if a property has a low EPC, let's say an F or an E, I know we're all trying to get to C in several years' time, which is going to be a long time coming, I think. But if it's a very low energy performance certificate, do you think there would ever be any requirement for the seller to improve that before they sell it? Or could a mortgage product be held back until the new buyers had improved that energy performance? Is there any likelihood that the two will be linked?
I think that's a really tricky question. Obviously those that are concerned with climate change, understandably they would demand action now and they want things to happen as soon as possible. But most of the UK's housing stock is old and it's not easily improved. Building newer, more efficient properties would work and would be a benefit. But new builds are only about 1% of our total property stock each year. And that obviously gets gobbled up by new demand, so new buyers on the market. And therefore, I think placing that responsibility on individuals who are living in kind of older properties, it could be a very difficult situation. I think, potentially these are, people that are not able to actually invest in it, and therefore that responsibility being on the individual within a shorter period of time would not necessarily be successful.
No, it is difficult. I mean, in the area where we are, we're Brighton and Hove, and obviously there are a lot of conversions, a lot of the older Victorian, Edwardian buildings that their upkeep is expensive already. So again, you've got lots of underground water as well going through Brighton and Hove. So you can see problems arising if suddenly there was a terrible flood or things like that. And sometimes you feel completely helpless about what you need to be doing to your property. And as you say, property is expensive to look after. I don't think there's a single year when you don't have to do anything to keep it completely up to speed. So all these costs add up year on year, don't they?
Yeah, I think that's absolutely right. They do. And, I think that there's been attempts of regulation to help, businesses or owners of property to improve property. And they've been rolled back, or they've not really been realised. And I think in reality right now, there's not the practical capacity, that being, builders, fitters, raw materials to deliver the higher standard of properties across all of the housing stock in the UK. So I think, it's pragmatic to obviously think about it over a longer period of time and work towards those goals, as the government targets and lenders already are in the UK.
Well, I think the weird thing as well is how our relationship with property is changing. We aspire to have double glazing to keep the drafts out. We want insulation in the walls. We want roof insulation. Suddenly we have a few days of 33, 34 degrees and we're all wishing we put in air conditioning, which is a very weird situation to be in. I know, in the Mediterranean countries, very often they do have external air conditioning units, but here, not very many. So as a whole, I think homeowners are going to have to reconsider and take note of what mortgage companies, insurance companies, people like Hometrack are doing to ensure that we are on track, actually, with all the different changes that are coming forward. Where do you think the simplest solutions would be to improving our properties?
It's a good question. Energy use in our homes is a really big contributor to our monthly bills, as you say, and obviously our carbon footprint as well. The UK's 28 million residential and 2 million non-residential buildings account for about 17% of total carbon emissions. And so making our homes more energy efficient can therefore be a win-win for both our finances and also our kind of net zero targets and overall our planet. But for many homeowners, I think energy costs now are 2 to 3 times the impact on their monthly affordability of the property compared to about 5 years ago. And so, that trend means, clearly there is a benefit to improving our properties, improving their energy efficiency in order to reduce that monthly commitment, that monthly outgoing. And therefore that having quite a significant impact on everyone's cost of living on a daily basis. The things that they could probably look at specifically, or ways in which you can retrofit your property to improve its energy efficiency, are things like wall insulation, new boiler installation, to upgrading your windows, for example, to reduce the drafts, right through to adding solar panels to the roof of your property. Now, there are many kind of a retrofit sort of calculators that you will find online in different services that would be able to support somebody in understanding what those likely costs could be and, prioritizing them in terms of the impact that they would likely have on energy efficiency as well. Of course, those kind of costs for most of us would fill us absolutely with dread. It's not something that we plan for, that we put money aside for necessarily. And so the question is really, how are we going to pay for those improvements? Some lenders do offer further advances to fund home improvements for things like insulation for heat pumps and replacement windows. And so again, at the point that you're looking to take a mortgage or renew, I think that's something that is worth looking into and exploring what those options are. It's all something that lenders are wanting to do to obviously encourage homeowners to kind of take that responsibility to increase the energy efficiency and rating of their properties.
I do sometimes wonder whether we need to perhaps sit down and more carefully think about what our property is going to cost over the lifetime of us living there. So it doesn't all need to be done at once. Obviously, if you're a landlord and you've got a property that needs upgrading, you would, I hope, sit and work out a budget possibly over 5 years. So it would be worthwhile for a lot of homeowners as well to know, well, we can't do everything at once. Let's plan what we're doing over the next 5 years. Let's find out how much it's going to cost us and then budget for that, because there's nothing worse when everything starts going wrong at the same time. Your windows need replacing, your boiler suddenly starts playing up, and it's always just before the winter time, isn't it? So all the preventative measures that you can take to make sure that you cost it all out, you know what's coming, you can plan it all in and make that a lot easier. In fact, I sometimes wonder why homeowners who are selling don't have, well, yes, they have to have an EPC, but why it's not expected that it's done regularly, that EICRs are done regularly, that, we keep homeowners' homes as safe as landlords' properties are supposed to be kept as well. So there's so much online that you can find out without furrowing around for stuff. And actually, a lot of the larger companies do provide magnificent reports and costings and how much does it cost to do X, Y, and Z, that I think if we took a little bit more interest in our homes and where our money's going, it would certainly pay off in the long run. But do you think with all these costs for homeowners that some people might be thinking, do you know what, I've had enough with all these costs. I'm going to sell my property, I'm going to rent, and then the landlord is going to have all those costs. And of course, we Brits, we love our homes, don't we? But more and more people are starting to rent from all the generations now. So do you think that will be a sea change for a lot of people saying, actually, I want my money in my pocket, I'm going to go and rent, let the landlord deal with it, or do they just stay where they are?
It's a good question. I think it's a difficult one to answer. There's obviously lots of variables at play. The government consulted on increasing energy efficiency standards in private rented sector up to an EPCC by 2025 for new tenancies and 2028 for existing tenancies. I think at the time of that consultation, the impact assessment calculated that for the average property spend would be just less than £5,000 per property. And actually for those that were from a D upwards, it would likely be £1,000 or something per landlord. So it's useful to kind of get a sense of that kind of spend and that kind of numbers that it would cost a landlord. Unfortunately, those plans have been put on hold. So there isn't currently a requirement for landlords to adhere to anything more than a minimum rating of E. And so you couldn't necessarily predict that it would increase the rate or take the responsibility to defer to the landlords to do that. Of course, I think many would also argue that it's really on all of us to improve the energy efficiency of the housing stock across the UK. And without that kind of concerted effort from everybody, we're not going to see that kind of meaningful change that we need to see in order to reduce the risk, obviously, to our planet.
So obviously you've already spoken about how the mortgage market is evolving. What is the likely impact going to be on Mr. Everyday and every woman in the street on that? Are they going to be looking at more costly mortgages? Are they going to be looking at, I know you mentioned more transparent mortgages at the outset. Will this improve their understanding of how mortgages work and how the mortgage industry has to look at risk from that perspective? Will the understanding between the different, these different stakeholders improve by all the work that Hometrack, Zoopla, all the other bigger companies are doing to make everything more transparent?
Yeah, I mean, we certainly hope so. And I think it's definitely an industry change that really needs to come about. But, as I mentioned earlier, regulations like consumer duty have been really important in encouraging lenders to focus on good consumer outcomes, and therefore, providing information to them, being able to explain decisions and traceability in those decisions is something that they consider very much important. Today, lending decisions are reached based on whether a home meets lending criteria and whether it meets particular credit policies for the type and value of the home that someone's applying for. And also if the consumer has the right credit score as well. With Consumer Duty, I can see that there could be a shift away from a sort of one-size-fits-all approach to mortgage products and pricing, where rather than taking very conservative policies in order to mitigate against the risks, such as climate-related risks, that mortgage businesses focus on providing different dynamic pricing and offers to different consumers. And in that way, I hope that it will stop us kind of reducing the choices for consumers, because that's really the antithesis here, is that we highlight a lot of risks associated with a property and lenders become much more conservative, and that ultimately will reduce obviously the number of mortgages that they're able to offer. We really want to be able to make the data available much earlier on in the process in order to actually open up the possibility of lending and make it possible, because actually the amount of information and insights available through data, through digital and automated methods is more. It provides more transparency and therefore certainty than traditional methods where we send somebody out to a physical property to assess it and to view it without necessarily the comparisons against other applications in the market.
At the moment, if I want to find out the EPC of a property or I want to look at the council tax band, it's very simple going on the government website just to have a look. Type in the postcode and it's amazing the information that comes up on there. Is this ever likely to hit the mortgage industry, whereby if I type in a postcode and I want to know if mortgages have been approved on a certain property due to or refused due to flooding risk or due to whatever else could possibly happen, is that ever likely to come to light?
That's a fantastic idea, and I think as an industry there is a lot of talk at the moment about open property data and being able to all participants in a transaction or in a mortgage journey being able to have access to the information related to that property, and that could potentially include particular searches or information that has been held against that property. So yes, I'd like to think that is something that is something that we can realise. In reality, I think there's a lot that needs to be kind of worked through in terms of data governance, understanding the provenance of data and therefore how participants in the journey can use it. And that's something that is particularly important to Hometrack. Is making sure that the data is accurate and that, if we're using it for lending decisions, that the same data is potentially then passed on to the consumer so that everybody has a single source of truth. And I think that's something that we've heard lenders really talk about as well, is about how do you make sure that there is a single source of truth for that information if everybody's going to be using it. Something that we are exploring is not necessarily the industry sharing of information like that, but we do make it available for lenders where an application has been submitted and we're looking at a particular individual address in the UK. We do make it possible for them to refer back to previous valuation checks and surveys that they have conducted for that property. And so that then can be incorporated into the review of the property and the risk associated with it. And therefore, if there is a property that had been declined previously, then they would reference that and know that. So there's definitely steps in that direction, but it may take us a little bit longer to get there, certainly to the point where a consumer can search that information.
That's it. Well, and also there's GDPR, isn't there? So there's all sorts of things we have to consider.
Of course, yeah.
I think, again, all the online transactions, etc., that take place with banks nowadays, where you don't actually know who your bank manager is anymore. How easy is it going to become with AI, for example, and all the transactional analyses that go on for a customer, for a bank to personalize mortgage decisions? So if you know that somebody is regularly frugal or high spending and those sorts of areas, could decisions be made on those areas? Is AI clever enough to make those decisions themselves, or would there have to be human intervention at some point? And this really is about whether you refuse somebody a mortgage or not. And I'm thinking about people who perhaps want to buy a property that needs doing up, refurbishing completely. I know generally there may be a retention on the mortgage, but if those people, the profile of the clients are such that we know they're responsible, that we know that they've got money there sitting there to do these refurbishments, how much can the banks actually make a decision based on those transactions?
It's definitely an interesting topic in terms of how lenders assess the credit risk profile of an individual. It's not necessarily an area that Hometrack is focused on, and so I'll be careful to not comment too much. But the valuation and risk pre-screening that Hometrack provides to lenders at origination could certainly be used in individual credit risk decisions and enabling the dynamic policies and decisions that I've mentioned previously. So, for example, where a property and a borrower both have a standard risk profile, then a much higher loan to value ratio could be confidently accepted and given to a consumer. Equally, if a property presents a very low risk, lenders might be able to accept a borrower with a strong credit score and a low risk of default with a higher risk property, for example. So I think what it enables is just, different variations of pricing when you overlay property risk with the individual credit risks. And I think that could be quite interesting. Yeah, in terms of how you actually determine individual credit risks, I think certainly there is more and more data available, and yeah, absolutely hope that lenders are beginning to utilize that and use it for monitoring. One of the interesting things that we have kind of considered and thought about and spoken a little bit to lenders about is how they can use the property risk and the credit risk to actually improve a mortgage offer through the lifetime of the mortgage. So, for example, they might be able to basically adjust the loan to value for the mortgage within the term of the borrower's loan. And that could mean that a lender effectively could achieve a better rate once they've paid off a particular percentage of their mortgage, rather than sticking on the same rate for a fixed period, 5-10 years, for example. That I think is really interesting. It obviously kind of rewards, prompt payment. It rewards kind of, affordability and being able to, pay off your mortgage effectively. So that could be something that I think would be interesting.
Mortgage are interesting. Now, I've been talking to you for the last over half an hour. It's been fascinating. So let's imagine, fast forward to 2050. News channels make us shock announcements that scientists have found a solution to rid the world of greenhouse gases. Hometrack is the market leader in automated valuations. This was the AVMs that you referred to at the outset, delivering 50 million valuations a year to 17 of the top 20 UK banks. What three immediate changes would we see in 2050 if this were the case, and why?
Yeah, I mean, well, wouldn't it be great news? Particularly, I think it'd be great news for people living in some of the oldest and lowest quality properties, which, as we said, is those that are likely to be more impacted by this. Sadly, they're overrepresented in the public sector housing and in the cheaper end of the private rental sector. And so I think that would be really good news. Those poorly built houses are often the more expensive to heat in winter, as we've said, and and also suffer from that unbearable heat that we are experiencing in the last few days. Mm-hmm. I think it would also mean the UK could, potentially reduce the 800 million we spend every year in flood defences, and upwards of a billion that we lose to flood damage. And clearly that money could then be redistributed to improve our housing stock hopefully for everyone's benefit. So that could be a good advantage and benefit. Coming back to sort of lenders and property risk decisions that we obviously support lenders with, we might expect to see lenders remove or adapt the climate risk related policies in their lending rules. And this could potentially mean more properties are mortgageable, and that certainly we could be using automated valuation models to be able to value and assess the property risk as well. And so, clearly that would be a positive for what I've described our Hometrack mission and goal as, in terms of achieving a kind of automation first approach to property risk decisions. I think, one's probably last thing, like on a more philosophical note, the risk of climate change and the danger it presents is a strong impetus for change. And so I would really hope that removing that danger would not mean a rapid return to building cheap properties that would likely have other negative impacts other than the climate related ones. So I think that's something that's really important, that, clearly climate is an urgent topic for us to address, but actually it's change that is needed, because there are things that need to be improved in terms of the way that we construct buildings and maintain them going forward as well.
Sarah, it's been delightful having you here on Let's Talk Property. You've really enlightened me in lots of different areas. So can you give me the Hometrack website? So if anybody wants to look at the link that you provided earlier on, obviously it will be easy to access, because I will make sure everybody has got that. So the link, please.
Yeah, absolutely. It's hometrack.com. Hopefully that's fairly easy to remember. And actually hopefully got new pages on our website going live in the coming weeks as well, which will really echo some of what I've told you today about what we do and the data solutions that we provide to lenders.
Oh, that's fantastic. Thank you. I can't believe we've been chatting for 45 minutes now. So we've done very well to get so much information in. So thank you to Sarah Guha for talking to me today, Director of Product at Hometrack. And I hope you've enjoyed the conversation. Thank you very much, Sarah, and enjoy the rest of your day.
That's great. Thank you for having me. Thanks.
Thank you. Thank you. Thanks for listening to Let's Talk Property, and let's talk property again soon.